Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Last week, we left you with the prospect of the December corn contract making a double top near the 343.25 level. It's exactly what we're looking at this time, and as we can see clearly, the market has moved down from our timeline that we had discussed previously near the September 20th to the September 22nd timeline. After the market marched up to the edge of our transition time, the market has since been moving down, and it's currently retesting previous lows near the 330 mark. Currently, if the market is able to break down below about 325, we believe the previous low from October 31st or around September 1st should be retested, and we should see a move that could very well go down to about 314.75 or lower. We'll continue to monitor as the market goes, but for now it's been very nice to see that our key levels have held up very well, and as the market marched up into resistance along the timeline that we spoke about, the market has reacted very well. Today the market is down slightly after having been down about 3 to 4 days. We saw a slight bounce yesterday, but we have returned back to lower prices again today. Yesterday's low came in at 331.75, and 2 standard deviations below the point of control sits at 327.5. That happens to coincide very closely to our previous lows that we talked about before. So once again, breaking down below 326 or so should send us down to retest that 314.75 number we spoke about not too long ago. The March corn contract has the exact same pattern, so we will not belabor the point. We came up and had a lower double top near the 353 mark. We're retesting previous lows, and downside target for this guy would be that previous low that we saw about September 1st or so, which comes in at right at about 325.25. Much weaker below that, we can go down to about 316.5. Don't anticipate that the markets will get much lower than that 316 number, at which point we're looking at towards the end of the month for a reasonable low to perhaps set in, and then for the market to continue sideways to slightly up from that point forward, perhaps starting at the end of October. In this instance, we have the point of control, or at least 2 standard deviations below the point of control, sitting at 342. Current price is at 339.5, so the market has been struggling with that 342 number having been the high for yesterday, and the market returning to weakness again today. And once again, we're looking for a retest of that previous low. We've recently been discussing how the natural time series of the Fibonacci time count played a key role in helping us determine key support and resistance and potential turning points for the November beans contract. Last week we had mentioned that 53 was that magic number, and one of our astute subscribers did bring to our attention that the number actually was 55, not 53, although the analysis still holds, because what we're looking at here is a mirror move where we had in both instances a repeat of that 53 mark, and 53 once again is very close to 55. So the analysis in essence still holds true, but we do appreciate our astute subscribers. But looking at the market here, that top that we talked about held up very well up against 988.25. The market has since declined, and our first level of support that we saw was near that 937 that occurred yesterday for a low. The market is again returning to weakness, and we have found a bit of resistance near the 958.75 area. So it's going to be very key for this market. If we close below this 937 mark before the week ends, then we're looking for a move that's perhaps going to test about 900 before coming off the board. The next very important operative level that we'll be looking at is 928. A close below 928 either this week or early next week would be a telltale sign of continued weakness to come near term. The point of control for this November contract sits at 960.5. You'll notice after the big decline that we saw over the past few days, 960.5 happens to be exactly where key resistance lives. And so for this week, we're looking at 960 half. If the market's able to close above, we're looking at potential continued strength near term. But as long as he stays below, in all likelihood, we're looking for a test to the downside. The January beans contract found its resistance very close to our sinusoidal natural recurring cycle line or trend line when it reached its high near about 990. As the market came in, tagged about 990, it moved down to near-term support near 955 half, and that's currently where it is struggling. And so what we're looking for is for the market to come down. Next key level for him again is about 925, and our near-term target of coming down to about 900 is probable for this January contract. In this chart, we're simply highlighting the time factor that we had shown you last week, suggesting that September 21st was going to be an important timeline. And as we can see, the top came in very close to that date. Market has since declined, and we're looking at our horizontal support levels here as being key support for the market, as it's touched it a number of times. Closing below here should send us down to our next horizontal level at a minimum. December wheat has been doing quite well, remaining inside of its trading range. Top side of that range has been about 413, and then the low end of that range has been about 392 3/4. As long as this market continues to move range bound, we're looking at two key levels that are going to help us determine which direction he perhaps wants to go in first with some momentum. We're looking at 388. A close below 388 prior to closing above 413 will tell us that the market wants lower prices before heading back up again. And if he's able to close above 413 and find some strength, then we should see a market that perhaps has some legs and enough strength to continue moving up to sideways through about mid-November. For now, we'll continue to monitor how this contract continues to move. But as you can see, the sideways movement has been very strong for him over the past several weeks. 2 standard deviations below the point of control for this contract is at 399, very close to where the low end of the trading band has been. And so as we can see, this area continues to be very strong for him. A clear close or some clear strength below this 399 that leads us down to about 388 once again will be very key for this contract. Similar to the grain markets, crude oil moved up into our time factor. As you can see at the end of this box, market moved up. After exiting out of the box, we saw a very big decline, and since then the market has actually been a bit range bound. We have an OPEC meeting coming up, and there were rumors because of an offer put out by Saudi Arabia, the market actually had made a move to the upside 2 days ago because of the potential for the reduced output if Iran had agreed on some of the terms. Since then, news has come out that Iran has declined those terms. The market then went down yesterday, but today we find that support is in fact holding up pretty well. So key for crude oil right now is getting up above that 47.60 area. If we're able to get up above this 47.60 area prior to breaking 43.50, we continue to believe that upside potential still exists to test the 50 number. And much above that, we can then see the market perhaps rise to close to 61. Thanks again for joining us for our weekly market update. We look forward to touching base with you again next week.